the unit that you can see on the screen. So we'll be speaking to Unit 3, obtaining and actually charging for professional work. And the sections we'll be speaking to about 5 of them. We'll be elaborating on the first section, obtaining professional work. The second section, advertising and publicity. And the third one will be speaking to fees. And the fourth one will be talking about tendering. And finally, we'll be looking at credit control within an audit firm. Okay, we'll start now and see how much we can cover for the evening. All right, speaking to obtaining professional work, which is the first unit we'll be talking about. In auditing, especially for audit firms, obtaining professional work is resident or dependent on the reputation of the firm. The reputation of the firm in terms of service, in terms of quality work, and also the referrals, looking at how they are referred by their clients, by companies they've enjoyed their services. So these are areas and means by which audit firms could obtain professional work. Also advertising, and within the ambits of the law, there are ethical rules, there are ethical advertisement, and there are unethical advertisements, which we'll be looking at subsequently. Also, the fees charged for professional work should be fair, should be reasonable, based on time, risk, expertise, and the ICAN guidelines on minimum rates, providing upfront communication, avoid undercutting, are rules and regulations that help in addressing the issue of obtaining professional work. This is important. So you will see that an audit firm or an assurance firm, obtaining professional work is not just about finding clients. It is about doing so ethically and also professionally and in line with international standards. This is where international standards on auditing, the international standards on quality management, and the code of ethics actually play a central role. Very important. So the sources, there are sources of obtaining work. Auditors have sources of obtaining work, which includes referrals, like we said, from existing clients or other professionals. Then we have also direct approaches from potential clients. We also have competitive tendering, which we'll be talking about elaborately later. Competitive tendering, talking about bids for large audit assignments, especially in the public sector. So it's very important we understand these sources of audit work or obtaining professional work. And secondly, we have ethical considerations. So before accepting new work, the auditor must ensure that his independence is intact and no conflict of interest or relationships that will impair objectivity. And also the ethical considerations could be around the integrity of the prospective client. The auditor needs to assess his reputation, the history of his compliance, the governance structure of the client. These are very important ethical considerations. And the professional competence also is important. Do the firm have the resources, the industry expertise and experience, and also the technical capacity to deliver? These are ethical considerations. Before accepting new job or obtaining professional work, the auditor must ensure. So for example, if a mining company, I work in the mining space currently, if a mining company approaches a mid-sized firm, but the firm lacks expertise in extractive industries, the mining space is an extractive industry, it may need to decline or involve specialists in carrying out the job. So these ethical considerations are very, very important in considering or determining whether to take or accept a new or professional work. Also, the third area you look at are procedures before accepting. The auditors should be able to perform client acceptance procedures, which includes, amongst others, background checks on the client, including the management's integrity, also understanding the nature of the business and risks involved, reviewing independence, like we said earlier, and conflict of interest. Another procedure is to evaluate if the firm has the time and staff to perform the work. And also discussing with the previous auditor, we've always spoken about that. You see, this links back to ISQM 1 and 2. In Unit 1 and 2, we looked at where the firms must have quality risk assessment processes for client acceptance and continuance. Very important. So it's important to take note of the procedures before accepting, which we've been talking about objectively and in previous classes. Also, with more emphasis, professional work via tendering. We'll be looking at it under the section of tendering elaboratory. You know, firms may need to submit proposals. That's what tendering is all about. Speaking about their detailed competence, experience, methodology, and fees. So those proposals should be transparent, and fairness must guide that process. We'll be looking at that elaborately in the next in the subsequent sections. And care must be taken not to undercut fees. Speaking to lowballing, which we'll be talking about, in a way that compromises audit quality. This is very, very important. And also speaking to risk of improper acceptance. There are risks of improper acceptance. So if an auditor accepts work without doing due diligence, there are risks of association with fraudulent clients, and it could culminate in reputational damage to the audit firm, increased litigation, and regulatory penalties. Could also lead to audit failure due to lack of industry knowledge or resources. For example, accepting a client later found guilty of money laundering could expose the firm to regulatory investigations. So in conclusion of this first section, the key takeaway is that we must remember this. Not every client is a good client. So in practice management, obtaining professional obtaining professional work must always be guided by ethics, by competence, and also risk assessment. This is very important. So like we've seen previously, quality management standards, ISQM 1 and 2 reinforces that client acceptance is not just as important as, client acceptance is as important as audit evidence gathering. This is very, very key. So that's a brief preamble to obtaining professional work. Very important. So like we have as our culture, if you have any challenge or any concerns, any observations, please interject, freely raise your hands, and I would stop to take our questions, observations, contributions as to the subject we're talking about. Okay, so that's the end of section 1, speaking to obtaining professional work. Let's look at advertising and publicity. Advertising and publicity. So when a professional accountant in public practice solicits new work through advertising or other forms of marketing, there may be a threat to compliance with the fundamental ethical principles. Actually, advertising in accountancy is not prohibited, but it must be done in tandem with the tenets of the profession. This is very important. So we need to adequately be guided in terms of advertising and publicity, and it must be done in a way that through these forms of marketing, there may not be a threat to compliance with our fundamental ethical principles. This is key. And for example, a self-interest threat to compliance with the principle of professional behavior is created if services, achievements, or products are marketed in a way that is inconsistent with that principles. So the guide is clear on advertising. And when a firm wants to advertise for services, we have to be very careful. And in a competitive environment, audit and assurance firms need to make themselves known, agreed. They need to attract clients and showcase their expertise, which is why advertising and publicity is necessary. But it must be done professionally and ethically in line with the ICAN Code of Ethics and also international best practices. So I will ask, or somebody may ask, what is advertising and publicity in audit? Advertising speaks to when an audit firm promotes its services through direct marketing, media, or other means. That's what advertising means. It means promoting services through direct marketing, media, or other means. Also, publicity speaks to when an audit firm gains exposure through professional activities. So, for example, seminars, publications, or public interest initiatives. So a simple example for advertising, it's where a firm places an ad in a business magazine like our ICAN monthly membership magazine or student accountant magazine, offering tax advisory services. That's a typical example of an advertising, a firm advertising in a business magazine. Then publicity is, for example, where a partner writes a professional article in The Guardian or Punch on corporate governance trends. That is publicity. So, in professional practice, permitted advertising speaks to audit firms actually may advertise, but within strict ethical bounds. So, take note of this. The first area is the advert must be truthful and not misleading. So that is permitted advertising. The advert must be truthful and not misleading. Secondly, it must not make unsubstantiated claims about quality. Speaking like we are the best auditors in Nigeria is not acceptable in advertising, ethical advertising for accountants. We are the best auditors in Nigeria is not allowed. So unsubstantiated claims about quality and output is unacceptable. Also, firms must not make disparaging comments about other firms. It's unacceptable. And firms must maintain professional dignity. It's very important. So the profession restricts advertising compared to other industries. So advertising must be restricted. Just like it is in medical practice, you'll see that advertising is to some extent prohibited and regulated in the medical field or medical space. So it is in accountancy. So there's permitted advertising, but it has to follow best practices and acceptable way of doing it. Also, there are acceptable forms of publicity, speaking to publishing technical articles, hosting training workshops or webinars, contributing to public debates on finance, audit, or governance. Also participating in professional conferences. You see that these are acceptable forms of publicity because they enhance professionalism. Very important, very, very key. And there are risks associated with improper advertising. There are risks associated with it. And the issue of the risks must be assessed appropriately. So risk like loss of credibility, overstated claims can damage the firm's reputation. So that loss of credibility are risks that must be safeguarded and mitigated against. Speaking to another risk of unfair competition, undercutting fees could be as a result of for the job or promising guaranteed outcomes really undermines audit quality. Yeah, it undermines quality. Another risk is disciplinary action. Breach of ICAN's ethical code can lead to sanctions. So, looking at an example, for example, if a firm advertises with a slogan, for example, we guarantee a clean audit report, you will see that that clearly compromises auditor independence and would attract disciplinary action. You can't guarantee a clean or unqualified audit report. The outcome will depend on the job done. So if a firm advertises with a slogan, we guarantee a clean audit report, I mean, it clearly compromises audit independence and would attract disciplinary action. So in the AAA paper, a case scenario may show up on a firm aggressively advertising its services or promising outcomes. So candidates should identify this as a breach of professional ethics and actually explain the risk of doing this. This is very, very important. So take note conclusively on the issue of advertising and publicity. Advertising and publicity are important actually in practice management, but in auditing, they must be balanced with professionalism and ethics. So the guiding principle is this: promote your service or your services, but never in a way that misleads or discredits the profession or compromises independence. This is very, very important. Okay, so that will be the end of advertising. Any questions, any contributions on that? Do we have any questions, any contributions on advertising and publicity so that we can move to the next section? Any questions? Okay, I believe it's clear and succinct enough.
I think there's a hand up, sir.
Oh, okay. Fantastic. I can see KU. Thank you very much. KU, please go ahead, unmute and speak. Thank you.
Yeah, good evening, sir. Good evening,
Good evening. It's nice to have you. You're welcome.
Yeah, same here. I just want to, a kind of a further clarification. In advertising,
I'm struggling to hear KU. I don't know if it's the same thing with everyone. I'm struggling.
Hello, can you hear me? Hello, can you hear us now?
Yeah, hello. Yes, we're struggling to hear you actually.
How about now? Is it a bit okay? Hello?
Can somebody hear KU? His network is breaking.
Hello?
Yes, I think I can hear you clearly from my end.
Hello? Oh, network is really fluctuating. Hello,
yes,
sir, can you hear me now?
Struggling the same way I'm struggling to hear him.
Hello?
Yes, I think it's a bit clearer now. Yes, please, go ahead. We can hear you.
Let me just quickly go ahead. In advertising, sir, I came across something somewhere. I can't really lay my hands on it. They say I read that when advertisement is to be placed on a kind of a board or billboard or something, that it should not be too glaring, too inviting. I don't know how true that is, sir. I just hope I'm heard. Hello?
Yeah, I actually struggled with catching his thoughts. Yeah, I actually struggled to catch your thoughts. I don't know if somebody else heard him.
Hello?
Yes, I can hear you. It's just that I struggle.
Yeah, in advertising. In advertising, yes. Sir. How is there any guide? Any guide regarding the bill, let's say a billboard, conspicuously placed or something like that? Is there anything like that in a bill for one to advertise in professional accounting?
I actually did not catch your thoughts very clearly, but then I think I had this question speaking to advertising and billboard. So maybe let me just address that expressly. So for accountancy firms, billboard advertising has to be done pragmatically. it has to be done based on best practices. So every form and medium of advertising does not matter in accountancy, but it must be done ethically and professionally. So there's no restriction on saying you use billboards or use a particular medium. On there's no medium. All we are saying is whatever you're saying, advertise your services very clearly and make sure it provides clarity to what you are saying, and whatever you are saying or advertising is not disparaging, and it's not unsubstantiated claims about your quality. So you're not disparaging other firms, you're not doing anything against the profession. You make sure that what you're advertising is in line with best practices. This is very important to take note. So whether billboards, television, social media, the content of your advertisement is what is very important. And that's what we are saying. I hope somebody is hearing me, because it seems our network is a bit glitching today. Can somebody hear my thoughts? Can you hear me?
Yes,
I can hear you very well, sir.
Clearly.
Okay, fantastic. So speaking to the billboard issue, whether billboard, television, it doesn't matter. Oh, okay. That's good to hear. All right, that's good to hear. I hope I was able to address your concerns a bit. All right. You're welcome. Thank you for sharing that and bringing it to the fore. Okay, so let's speak to fees. And the general approach to the question on setting a price for the provision of service is always a sensitive matter in accounting and also audit practice. And because of disputes that may arise if the fees are unreasonable, it has to be done pragmatically and professionally. So in establishing the fee for professional work, the audit firm, the accountant should follow professional guidance. So in any case, they must ensure, the firm must ensure they do not breach any of the fundamental ethical principles. And very importantly, the ICAN Code of Conduct provides further specific guidance regarding fees. So as follows, it must be fair and reasonable, considering the time taken to do the job, considering risks, considering expertise, human capital, human resources that will be used for the job. So the ICAN guidelines on minimum rates, upfront communication, and also ensuring avoidance of undercutting are the principles that guide the charging of fees or prices for professional services that will be provided or will be served to clients or potential clients. So it's actually a sensitive and a very sensitive, but a critical area, the issue of fees in professional practice. Audit fees are not just about payment. They directly affect audit quality, independence, and the public's perception of that firm. You see that if fees are not handled properly, they can create threats to objectivity and damage the credibility of both the auditor and the profession. So in simple terms, somebody may ask, what are audit fees? Audit fees are payments for services rendered by the auditor. It covers statutory audit as well as non-audit services like tax, advisory, consultancy. So audit fees must reflect the time, like we said, the skill and the complexity of the work done or to be done. So for example, a small and medium scale enterprise audit should not be priced the same as a multinational oil company audit. So complexity differs. It's important to know. So price as the same as a multinational oil company audit, because complexity differs. Very important. And the basis for setting fees should be fairness and reasonableness based on work effort. It should not be contingent on the outcome of the audit, for example, linked to profit or tax savings. It should be transparent with clear agreement documented in the engagement letter. Very important. Contingent fees are actually dangerous in audit, so it must be avoided based on outcomes. Maybe you're saying you're linking the audit to profit or tax savings. No, that's unethical. It should not be a basis for fees. Also, ethical concerns on fees. Ethical concerns on fees. Speaking to lowballing, speaking to charging unrealistic low fees to win clients are ethical areas that must be avoided. And the risk is the quality of audit suffers as a result, or as resources may be insufficient. So where there are bids, competitive bids, lowballing means charging a lower price that would reasonably do the job just to win the bid. It's risky, and audit firms must avoid lowballing. Also, the ethical concerns on fees, like overdependence on a single client. If one client contributes a high percentage of fees, independence is threatened of the auditor, because if he loses that client, he may lose revenue or his mainstay. So the rule of thumb is if a client contributes more than 15% of the total firm's revenue, independence concerns arise. So 15% of the total firm's revenue in a year by one firm, the issue of independence begins to arise. So overdue fees, if unpaid fees accumulate, the auditor may become financially dependent on the client, and that will compromise independence. And that is why it's generally discouraged that the fees for audit jobs should not be withheld by the client. So it should be paid upfront, maybe a percentage upfront, and by completion, the fees should be settled. So imagine a firm where 30% of revenue comes from one client. You need to ask yourself, will the firm truly be able to issue a modified opinion if necessary? It's likely not, because this creates a self-interest threat. And 30% of revenue coming from one client, I mean, you want to tamper with that client's report, no matter what ensues or comes up during the audit work. So there should be safeguards to protecting independence, irrespective of this fee issue. And part of it is what we've been discussing, speaking to rotation engagement partners or rotate engagement partners, or rotation of engagement partners to reduce familiarity. Ensuring that audit committee of the client or oversight of fees in listed companies, mostly audit committees oversight is necessary. They should provide the fees based on their assessment, mostly in big and large or listed companies. Also, safeguards like a disclosure of fee dependence to those charged with governance. Disclosure of those fees are very important. And another safeguard, worst case scenario, is to decline engagement if the fees threaten independence. Is very important. So in the AAA papers, in the AAA exam or the paper, a case may state that the audit fee represents 25% of the firm's revenue, and payment has been overdue for 18 months, something like that. Candidates should quickly identify the independence threat, speaking to self-interest, the issue of risk of intimidation. The firm may hesitate to lose the client, and also appropriate safeguards like disclosure, or reducing reliance, or resignation. So you should be able to identify that if such a case is presented on this. So conclusively, the key takeaway is that fees are not just a commercial matter. Take note of that. So for auditors, they are also an ethical and independence issue. Always remember the perception of independence as an important, or is as important as independence itself. Managing fees fairly, transparently, and ethically is central to sustaining audit quality and public trust. This is very, very important. Okay, so I've shared a lot of thoughts on this, and that will be the end of the fee section. Any question, any contribution, any observation based on fees we've looked at? Any question, any contribution?
Hello, sir.
Yes, please.
Okay, so I was looking through one of my texts.
Okay.
Sorry. Okay, I was looking through a text and I
think we lost him. Can somebody hear Samuel?
Hello, can you hear me now, sir?
Yes, please. Yes, please. Go ahead.
Okay, I was looking through and one of the factors to be considered in one of my texts says importance of the audit work. I was wondering, I don't know if you can help throw more light on that. They mentioned professional expertise, time expended, degree of risk, responsibility and priority, then importance of the work. Now, this importance of the work, I was wondering, who determines this importance? Is it the audit firm or the client?
Oh, fantastic question. Fantastic question. So, in terms of fees, the importance of the work is two ways. Speaking to the importance of the work to the client and also to the firm or the audit firm is important because number one, mostly statutory audits are compulsory, they are mandatory. So you can see it's important to regulators, it's important to the firm, and it's important to the client. Now, non-audit services like tax, advisory consultants are both important to both firms. So looking at the importance is two-way. If it is one way, then there is an independence issue. If audit services are not important to the client, they will not call for it. So the importance of the work, speaking to your question, is for both parties in the audit because it's a mutually dependent activity that will provide value to both. So if the audit firm provides this service, it's for the audit firm's reputation, building reputation. And once the client also has been provided with the assurance service, it shows that the client's books and operations are okay. So they are mutually dependent importance in my view. So for both of them, in answer your question succinctly, it's important for the two parties involved in this transaction. I hope you're okay with that.
Yes, sir. Thank you so much, sir.
Submission. Okay, fantastic. Thank you for that engagement. It makes a lot of sense. All right, so let's look at tendering. Tendering in audit engagements must follow a formal process because tendering is structured way for audit firms to compete for an engagement, often through proposals and presentations. So the key considerations is that firms must demonstrate their expertise, what they can do, their resources, human and financial, and also their ethical standing and the ability to manage risks very effectively. So professional conduct is apparent, it's imperative, is important. Transparency and integrity are critical in tendering. Firms should not compromise independence or objectivity in order to win an engagement. It's very important. So professional conduct is key in the act of tendering. And low balling must be avoided because it's offering, like we said earlier, unrealistic low fees to secure the engagement. And this is bad practice. It will impair audit quality, create self-interest threat, and also undermine the credibility of the profession. So in essence, tendering should balance competitiveness with professionalism. And they must ensure that audit quality is never sacrificed for commercial gain. This is very important. You see, the issue of tendering is a big issue in practice, and auditors must ensure that, of course, competition for firms or for clients by submitting proposals or tenders are inevitable. Tendering is simply a process of bidding for audit and assurance engagements. We know it's a legitimate business practice, but these areas of concern on ethics, independence, and quality considerations must be above every other interest. So what is tendering? Actually, like we said, it's a formal process where companies invite audit firms to submit proposals for providing audit or assurance services. So is commonly prevalent in public interest entities, PIEs, listed companies, or large organizations that want transparency in audit selection. So often part of mandatory firm rotation requirements. For example, after a set number of years, it's mandatory to rotate or have another kind of another audit firm to take up the job. So, for example, a listed bank, a big bank, may invite the Big Four and other firms to tender for a statutory audit after maybe a current auditor has served the maximum rotation period of maybe 4 years or 5 years. So generally, the objectives of tendering is to ensure fair competition among firms. And you see that it helps companies obtain the best quality audit at a reasonable cost. And also, one of the objectives of tendering is to promote transparency and independence in auditor appointment. And the risk, actually, or ethical issues involved in tendering speaks to low-balling fees, like we said earlier, where firms may deliberately underquote to win a tender. And that risk is critical, is high, because insufficient audit resources could be the result, and reduced audit quality, the outcome. So another risk is overpromotion and overpromising is another risk of delivery. Firms may exaggerate expertise beyond their real capacity in their proposal. So another risk and ethical issue speaks to confidentiality breach, like using insider information from previous audits to win a tender. Also, some other ethical issues like the independence threat, which is prevalent, is where a firm promises extensive non-audit services just to win the contract. So if an audit firm quotes an unrealistic low fee in a tender, the impact on audit quality and public perception can be very, very damaging. So that's why these risks must be assessed critically in assessing the issue of tendering. Very important. So there are good practice tendering is among others. Number one is to submit tenders that are fair, transparent, and realistic. That is good practice tendering. Ensure that the fee quotations reflect the scope and complexity of the audit. That is good tendering. Also ensuring that professional behavior is maintained, no false claims or unfair comparisons with competitors or other firms. Key, very key. Also documenting the basis for proposed fees and the services that will be provided very clearly in the proposal. For example, a firm should highlight its experience in the industry, its quality management measures, speaking to our ISQM 1 and 2, we looked at in Unit 1 and 2, and also their team's competence, not just offer the lowest price, no. So the experience, the quality management system, the team's competence are good selling points for the firm to end the job. So we could have a question, a practice or an exam question, the AAA question. You might see a scenario where a company is seeking a new auditor through a tender process, and one firm has quoted fees 50% lower than competitors. So you need to identify there's an ethical risk of lowballing in such a situation, and also the impact on audit quality and independence should be points you should build your arguments and conversation around. And the recommended safeguard for bigger companies is to ensure audit committee evaluates tenders based on quality, not just price. This is key. So in conclusion, on the issue of tendering, you see that tendering is not just a business competition for auditors. It's a test of professional ethics and quality. An audit firm must always balance the need to win clients with the duty to maintain integrity, independence, and public trust. So remember, in the long run, quality work wins more creditably than cheap fees. Very, very important. So take note of that in the issue of tendering. So any questions as we round up our thoughts on tendering? Any questions, contributions, observations? So we can run, I think, to the last session on Unit 3. Any question? Okay, I believe it was clear and succinct enough. So let's look at the next and I think the last section in this unit, looking at credit control within an audit firm. And I think after this we'll go on break. An audit firm's responsibility does not just end with charging fees. Yeah, it's not just charging fees, tendering. Okay, so it must ensure that fees are collected promptly because the audit firm has bills to pay. Very key. So timely invoicing, speaking to failure to issue invoice on time or delays in collecting payment after the invoice due date may signal poor credit management within the audit firm. So timely invoicing, and from my experience, I noticed the Big Four are very good at this. Immediately they are doing their job at inception, they will collect their money. At the middle of the job, they send another percentage and they'll be following up. And at the end of the job, they promptly follow. So good and effective firms ensure that fees are collected promptly. And where there's a weakness, this should be identified and corrected quickly, because the risk of non-payment sometimes arise not from inefficiency, but because the audit client is in financial difficulty and unable to settle fees. So where there is such situation, it also creates additional concerns for the audit firm, speaking to potential self-interest threats to the auditor's independence. If a significant unpaid fees accumulate, it's a threat and it could be a big issue. So possible going concern implications if the client's financial distress is severe, and that could trigger or flag an issue with the client's business. So the key point is that effective credit management is not just about the firm's cash flow. It also promotes the audit quality and independence of the audit firm. Very, very key. So generally, credit control, just like any business, audit firms need to manage actually their cash flow, their receivables effectively. And weak credit control can affect the firm's financial stability, very importantly, and even impair independence, like we've seen, because independence is the key word here. If auditors feel pressured to please clients, that is a bad situation. So somebody may be asking, what is credit control? There has to be systems and policies based on timings during the engagement, within the engagement, after the engagement, put in place to manage the collection of fees from clients. And it ensures that the work done is paid for promptly and fairly, keeping the firm financially healthy is very important. So, for example, an audit firm may set a policy that 50% of the audit fee is payable upfront. So what one of the Big Four does is they will ask you to pay 25% upfront. As they go half the job, they tell you to pay 50%, and as they complete, they will do 50%. So it's a good way to manage the credit or the fees during the engagement. And the objectives of this, or generally credit control, is to maintain steady cash flow for operations. Also to minimize the risk of bad debts from non-paying clients. That's the objective. And also prevent over to the client, So that's one of the necessary objectives of credit control. And key policies or procedures in credit control speaks to the engagement letter. The engagement letter to clearly specify the payment terms. So, for example, the upfront deposits, the milestones, the deadlines. So it should be clearly stated in the engagement letter. Also, client screening, that is the evaluation of the financial stability of prospective clients before engagement. It's very important. We should screen client and the financial viability. Also, another area of having key policies or procedure is monitoring. Regularly monitoring outstanding receivables and also following up promptly to get those fees by audit firm is very important. And big firms mostly delegate. They have a credit control officer or a finance team separate from audit staff to chase payments. Big four firms or big audit firms do that. Also, with services, they should have policies for joint services in areas of credit control. In extreme cases, firm may stop work, audit firm may stop work or resign from engagements where clients have consistently defaulted in payment. Of course, they will withdraw their services. It's not a charity audit firm, so they have to pay for the services provided. So those are situations and policies or procedures that should be in place in credit control management. And for firms, the risk of poor credit control is there are many, amongst which could cause the risk of financial strain. Firms under the code of ethics. Another risk is reputational damage. Continuous dispute over fees can damage client client relationship. So an audit firm that has not been paid for the last 2 years and yet continues auditing the same client is a big risk. It's a big risk. So situations like that must be avoided in writing. Also, safeguards like avoid having significant overdue fees outstanding at the time of audit report issuance. So avoid such situations. And for big companies, listed companies, quoted companies, audit committees should oversee the fair negotiation of fees for big companies, larger organizations, public interest entities, and the likes. And also regularly reviewing receivables and overdue accounts and the audit to be in place when credits approve. For example, if a client consistently delays payment, the engagement partner may raise the issue with the audit committee. I recommend revising terms before continuing the audit work. Yes. So the client management also is very important for audit firms to have their credits well controlled. So for maybe AAA scenarios, case studies, candidates may need to discuss how unpaid fees create a situation may arise in question where how unpaid fees create self-interest threats and why auditors should not issue reports until material undue fees are settled to avoid appearing to finance the client. So with such scenarios, we need to make recommendations like strengthening credit control systems of the audit firm and enforce like upfront deposits. Is very important in managing credits. A well-run firm is one that delivers quality audits while also maintaining discipline in how it manages its receivables. This is very important and this is key. Okay, so I haven't shared some thoughts on credit control within an audit firm. We'll be looking at the last, which is to Unit 4, and that's agreements of the audit engines, business international, that's on 210. Okay, so before we break, let's start your Unit 3. We just looked at any question, any contribution, any observation. So we can just go on a short 10 minutes break, come back and see how to continue. Any questions, contributions, observations?